Hi, my name is Tom Straub, publisher of the Stop Foreclosure Kit. In this video, you're going to get a little background on today's foreclosure frenzy and how you can keep the foreclosure process from getting out of control. Normally, things in life go pretty smoothly, but every once in a while, you find you just have to face emergencies that crop up, like foreclosure. When faced with foreclosure, the first thing to do to stay safe is to learn to predict and manage the negotiations with a mortgage lender. In addition, you should learn how the foreclosure process works and what mortgage alternatives are available to you. Only then will you be able to successfully manage any threat of losing your home and keep everything under control. I'm sure you're aware that today's foreclosure frenzy has crippled many segments of the real estate market. Still, you may be wondering what's exactly behind the current tidal wave of foreclosures. Ben Bernanke, the chairman of the Federal Reserve Board, believes he has the answer. Interestingly enough, Bernanke has concluded that joblessness is not necessarily a reason behind the upsurge in foreclosures. For instance, delinquencies in California, Florida, and portions of Colorado have increased, even though unemployment rates for the most part have fallen. However, part of the problem has been tied to something called piggyback loans. With these kinds of loans, no down payment may even be required. When the price of a home declines, the homeowner finds himself or herself owing more than the house is actually worth. According to Bernanke, in years past, lenders were accustomed to, quote, dealing with mortgage delinquencies related to life events such as unemployment or illness. And he goes on to say, a widespread decline in home prices, by contrast, is a relatively novel phenomenon, and lenders and services will have to develop new and flexible strategies to deal with this issue. If the value of the home falls so far it's below the balance of the mortgage, Bernanke recommends a write-down of the principal, but such a strategy should be limited to homes facing the greatest risk of foreclosure. The Federal Reserve has responded to the crisis by working to restore vacant houses, pushing lenders to work with borrowers who are at risk of losing their homes and ending abusive lending practices. In some cases, homeowners have been able to refinance in order to keep their homes, but still, Bernanke insists that there's a great amount of additional work that needs to be done. Foreclosure represents one of the greatest financial crises a family can face. Not only does a homeowner lose an important asset in a foreclosure proceeding, but they also may lose a sense of community, a sense of belonging, even a sense of identity. Homeownership is one of the greatest economic empowerment tools in existence today, and when that tool loses its luster, the results can be devastating for a family, who may even face the prospect of actual homelessness. Foreclosure also exacts a tremendous economic cost upon the nation. When foreclosures rise, realtors, home builders, electricians, plumbers, carpet salesmen, and others involved in work affected by the home industry may also suffer. The financial fallout can also affect the nation's economy as a whole. Fears of recession in the U.S. have been fueled in part by the troubles faced by the real estate industry. Once a family experiences foreclosure, they may find it difficult to rebuild their financial lives. Reestablishing credit, for instance, can be a nightmare. They may even find it difficult to secure a rental property because of the foreclosure which haunts their financial background. This is why it is so important to try to avoid foreclosure if at all possible. A family's economic future depends on it. Because of the necessity to do everything within your power to avoid foreclosure, sound home buying strategies are critically important. No doubt, the home buying process can sometimes seem highly complex, even overwhelming. But, with appropriate planning, you can pursue your dream of home ownership in such a way as to minimize your risk of foreclosure. You should determine how much you can afford in terms of a mortgage. It may sound elementary, but this is a step many earnest home buyers forget. They're so enamored by a particular property that they completely ignore the high cost involved. They figure, where there's a will, there's a way. Unfortunately, they discover that the house of their dreams has quickly led them to the poorhouse. However, you can easily avoid this problem by doing just a few quick calculations. There are a number of factors that determine what kind of house you can afford. For instance, you must factor in your income and your current expenses each month. Next, you need to take account of your credit rating, the amount of down payment you can afford, and the interest rate you're going to be charged. A number of websites offer online calculators which can do the mathematics for you. However, to be absolutely sure what you can afford, it's best to check with a reputable lender. Do some comparison shopping. A little research can go a long way in preventing foreclosure. When you're considering purchasing a home, whether it's new or pre-owned, interview a number of different lenders. Compare loan costs and interest rates with each one. You might even be able to engage in some negotiation in an effort to secure the best deal. Also, Keep in mind that FHA loan programs enable you to make a smaller down payment and may be the best course of action for you if you're buying a home for the first time. Choose your home carefully. A home by far is the biggest purchase you'll ever make, so you want to make sure that you choose carefully. To begin with, hire a realtor who specializes in buyer's needs. That way you can ensure that the real estate agent is looking out for your best interests in the course of the transaction. Make a list of the features that you absolutely need in a home. For instance, do you need 3 bedrooms and 1.5 baths? If you can live without an in-ground swimming pool, don't put it on your list of must-haves. When you're shopping, be sure to look at only those homes which are in your price range. That way you'll avoid the temptation of overbuying. If you do select a home with the Homeowners Association, make sure you ask for a copy of the HOA packet so that you can look it over before your closing. Make a realistic offer. When you've selected the house that's best for you and your family, make a realistic offer with the help of your realtor. If the seller provides a counteroffer, don't necessarily accept it at face value. Rather, consider making a counter to the counteroffer. That way, you're more likely to get your money's worth out of the sale. Arrange for home inspection. This can be an incredibly important step for saving money in the long run. If a home has serious structural problems, you may be able to arrange for the seller to handle the costs of the repairs. You may even be able to avoid purchasing a home that is in serious need of repair. You're far less likely to face foreclosure if you can avoid high repair bills. Get a blueprint for avoiding the foreclosure trap. In addition to the following sound home buying strategies, you should consider mapping out a blueprint for avoiding the foreclosure trap. But exactly what should this blueprint entail? Instead of just getting pre-qualified, consider seeking pre-approval for your house loan. Taking such a step doesn't just make the home buying process easier, it's also a means of self-protection. Here's why. In order to get pre-approval, a lender must verify your income and secure a copy of your credit report. The lender will then have to calculate the most money that you can afford to borrow in order to obtain a house. In this way, you should be able to avoid making an offer on a home that you really can't afford. In addition, when you apply for pre-approval, you'll have to back up your intent to repay the loan with a mountain of paperwork, like W-2s, bank statements, paycheck stubs, and other supporting evidence. Avoid an adjustable rate mortgage. The temptation can be great to seek an adjustable rate mortgage. After all, such mortgages tend to boast interest rates that are initially 1.5 to 2% lower than the typical 30-year fixed-rate mortgage. However, once the loan readjusts to a higher interest rate, you may have great difficulty repaying the loan. When your monthly mortgage payment suddenly skyrockets because of a rate adjustment, you might not have the wherewithal needed to deal with the increase. Avoid a balloon loan. Another questionable loan option that's been popular in recent years is the balloon loan. With such a loan, you benefit from a lower payment in the initial years of the loan, but at the end of the trial period you'll have to refinance, pay off the loan entirely, or change it to a fixed payment plan. A 7-year balloon loan can seem attractive at first, but if you're planning to remain in your home for any length of time, it can be highly problematic. In such uncertain economic times as these, it's best to avoid balloon loans if at all possible. Keep your closing costs under control. If you end up paying a tidy sum in closing costs, you may find yourself cash-strapped when your monthly mortgage is due. As a result, consider asking the seller to help shoulder the burden of some of the closing costs. In some cases, the seller may be willing to foot the bill for all of your closing costs, depending on how eager they are to sell their home. In any case, make it a point to stay within your budget when it comes to closing costs. That way you're far less likely to take a financial beating at closing time. Now that you've covered the basics of home buying, it's time to examine the subject in greater depth. In my next video, we're going to take a closer look at determining the value of the home that you can realistically afford.